Today I'm sitting down with Michael McDonald, Director of Private Markets at Wellington Altus Private Wealth. Mike, thanks for making the time today.
Absolutely, and thanks for having me, Eric.
Awesome. So today just wanted to get into discussion about in simplified terms, what is capital markets and what does your team do, right? And there's a lot of exciting stuff happening out there with the capital markets team via SpaceX, our most recent deal in Anthropic. So I'd love to get your take on what your team offers to our clients.
For sure, and I find capital markets can be this vague and somewhat ambiguous term. Depending on who you ask, you'll get a number of different answers. Really, at its core, capital markets functions as a way to connect investors with opportunities. Many of these opportunities aren't available in the public markets, hence really the advantage we have, such as regular stocks and bonds. Think of it as this way. On one side, you have investors who are looking for these opportunities, and on the other side, you have issuers who are looking to raise capital for a number of reasons to grow. Really, at its core, we act as a bridge for those two parties, and our job is to help you navigate it.
So we've been doing some work together for our clients for a couple years now, and we've had phenomenal experience with you guys. It's really opened our clients' eyes of some of the unique investment opportunities that are out there. And I brought you to meet with some of our clients for some in-person seminars. And one of the things that you mentioned in our other meetings was the 4S's, and that's what you guys offer. Can you explain what you mean by the 4S's of the capital markets division?
For sure. And so the 4S's are kind of our way of demystifying what we do in capital markets. So in chronological order, one, sourcing. We have a number of different levers to sort of originate an offering. So we'll put in typically months and months into finding a high quality deal, whether that is, to your point, a pre-tech IPO like SpaceX, or if it's a real estate mandate, a thematic opportunities fund, etc. Really, that's a very important aspect of what we do is the sourcing, of course. Two, structuring. Structuring for our retail clients is extremely important. We're not a pension plan. We have a different time horizon to investment. We have different requirements. So when we look to structure something, we do so in a very tax efficient and investor friendly way. And then third would be sales. Sales probably speaks for itself, but we like to get on the road. We like to put advisors and clients in front of our management teams to give you the comfort and the trust you need to transact. And then four, likely the most boring of the S's, is settlement, but a very important one anyways. That means us liaising with our back office, other dealers, putting together the legal framework to actually execute cleanly.
Mm-hmm. And what's interesting to me, I guess the most common question I'm getting from my clients, it seems to be around the sourcing, because they're so impressed. How do you guys find these deals? What are the relationships that you've made with other firms on the street for us to get access to some of these private offerings?
Yeah, and that is, kind of the secret sauce is those relationships. So we have a number of different providers that we use for, if we're talking about the pre-IPO companies, one of which is Stack Capital. That's actually a publicly traded stock. We access a number of different portfolio companies like the SpaceX's of the world, Anthropic, etc., through Stack.
And to your second point about the structuring, big topic of discussion for us is always taxes. And you mentioned creating something that's in a tax efficient vehicle for Canadian investors. What does that mean exactly?
Yeah, to give you one of the prominent examples, real estate being one. Say we're investing in a real estate project in the US, so outside of Canada. If you were to invest directly into that real estate project, that would open you up to a world of hurt as far as taxes go. Mm-hmm. So what we like to do is structure it with a Canadian limited partnership or mutual fund trust structure that acts as a wrapper on top of that real estate project. Mm-hmm. What that does for our investors is gets rid of the issues of US taxes, dual taxation, and gives you a really clean Canadian tax reporting to go off of.
And are you working with some of the big accounting firms and legal firms that have cross-border experience to set up those structures?
Exactly, yeah.
Okay. So now that we've talked about the structure and what you guys do, I want to talk a little bit about investment outcomes and objectives. So when a client goes into the private markets, what is the end objective and how could that differ from investing in the public markets?
Yeah, for sure. I'll answer that in maybe a few different ways. One is outperformance versus the public markets, all while maintaining much lower volatility. So whereas in the public markets you have, of course, second by second repricing, much of which can be an emotional response from investors, even when the underlying hasn't had a meaningful change to fundamentals. Whereas privately, it's based on cash flows, direct competition, latest valuations. So what we find is, reporting gets rid of volatility in the private markets versus public. True diversification would be a second one. So many of your clients, people listening today, obviously have exposure to public equities, fixed income, maybe some real estate through a public vehicle.
Yep.
But you can get true diversification from private markets. So think AI, defense tech, global infrastructure, to name a few.
Okay. And that's a key feature that I've noticed, is that because the products aren't being marked to market on a second by second basis, right? Clients, there seems to be a bit more emotional control on a client perspective because they're not seeing volatility. But just because we're not seeing volatility, that doesn't mean that we've eliminated risks. So there still are some unique inherent risks in the private markets that we got to disclose to the clients, right? So could you share some insights on risks in the privates?
Yeah, absolutely. So just because there isn't second by second pricing, that only really changes, your experience of investing. It does not necessarily get rid of the existence of risk altogether. Many of those risks that you have in public equities also pertain to private markets, but you do have that advantage of sort of more smoothed out valuations, and that's because of the way it's reported. Again, you're not looking at daily pricing. You're looking at sometimes quarterly or annually, which really equates to, again, a much smoother experience on average with investors.
Okay. And then another risk that we're looking at as advisors is liquidity risk, right? And a lot of times with these private investments, you don't have liquidity like you do on the public side, or all the time you don't have the liquidity like you do on the private side. So can you talk about lack of liquidity or scheduled liquidity with some of these investments?
Yeah, for sure. For, clients who this is applicable for and, can handle that illiquidity, you are compensated handsomely for that illiquidity. Think about real estate, for example, right? On average, when we're underwriting a real estate deal, we're looking for a 15 to 20% net IRR. So pretty attractive returns as long as you are able to handle illiquidity of sometimes, 3 to 5 years. Where applicable, we do like to put in sort of, a liquidity feature of sorts. So that might be an optional redemption. I actually get into, an example later on this.
Sure.
But yeah, where we can for our retail investors, we do like to structure some sort of liquidity feature. And again, that goes back to, structuring being one of the more important aspects of those 4 S's for a retail investor.
Okay. And I guess the liquidity planning, a lot of that has to do on my end. As the lead advisor, right, we understand our client's situation the best. We've done the financial planning. We've made a roadmap on when they're going to need liquidity, when they don't need their liquidity. So we can allocate a proper chunk of the portfolio into some of these privates where liquidity is not necessary, right? Exactly. And I think that would be the biggest thing to caution anybody who'd be interested in some of these strategies, is to not overextend yourself in locking up, because at the end of the day, you really can't, sometimes you can't predict when you need liquidity, right? So it's always important for me as the advisor to ensure that our clients' financial planning needs and cash flow needs are met and well planned for years in advance.
Yeah, and many of these mandates that we work on are in a sense customized for our retail investors.
Yeah.
So we definitely go into each deal with that in our minds.
I want to talk about some of the more exciting things that are happening. So, there's been some fantastic investment opportunities that our teams have worked on together. So I'd love you to just educate our audience watching on some of the current offerings that you guys have provided.
Yeah, pre-tech IPO giants. That's sort of what's really stood out in the last few years, and our access to those names in particular. SpaceX, everybody's favorite. Why don't I start with that?
Yep.
I'll highlight a transaction we did back in 2020, so fairly early on as far as SpaceX goes. We put together something, and this goes back to structuring again in that, S. We put together an investment into SpaceX that had an optional redemption feature. So in 5 years' time, if SpaceX had not gone public, we had the right to redeem our units. That equated to an over 510% return in 5 years. So a spectacular outcome for SpaceX. Our investors who wanted to continue on, importantly, could as well, and they've done quite handsomely as well. CoreWeave. CoreWeave is another name I want to highlight. For those who aren't familiar with CoreWeave, it's a hyperscaler, so AI infrastructure really powering the compute for many of the AI companies we use today. We were able to purchase privately right before their IPO on the NASDAQ. That resulted in a 3.1x return for our investors. So that really highlights, access to these pre-IPO names and the importance of that. And really what I liken, access to these names to is having pre-sale tickets to everybody's favorite band at a discount before it comes out to the public.
And I think a big misconception that people has is that if they're a private company, they just assume that it's a small company. And that's not the case at all, where a lot of these companies are bigger than many of the publicly traded companies in Canada.
You're absolutely correct. So with SpaceX, that's a great demonstration of that. Their recent XAI merger values them at 1.25 trillion with a T. Now, for context, that dwarfs the top 5 Canadian public companies out there: RBC, Enbridge, TD, etc. So that really does highlight the massive valuation of some of these private companies. And really what we're getting at is, if you're not allocating to private companies, you're really missing more than half the equation. And as these companies, the trend of them staying private continues, you're now missing a large majority of their growth.
Because that's another change, is that these private companies are staying private longer than they were 20 years ago, correct?
Correct, exactly. So back when Amazon was going public, you're still looking at 10, 20, 30x in the coming years. Whereas for many of these companies, you've actually missed the majority of their growth by the time they go public.
And in your perspective, what's the reasoning on why there's been a delay in these companies going public?
Yeah, many of them don't need the capital. So they've been able, and again, maybe, using SpaceX as the example, they've been able to grow privately. Elon's, love him or hate him, he's done a fantastic job at that. So they don't need public markets to tap for that capital anymore.
Is that because there's a lot more private capital circulating around that's looking for a home?
Absolutely.
Okay, that makes sense. Right.
So now the name of the game is really accessing those private companies, those private capital out there. Yeah.
Great. I was wondering if we can shift away from the pre-IPOs on some of the tech giants, talk a little bit about some of the real estate deals that have happened, because I know we've participated for our clients in some really unique, interesting real estate strategies that we wouldn't have had access to before.
Yeah, absolutely. I think I'd be remiss if I didn't mention real estate. So that's another sector of private markets that we specialize in. The theme across the board is really niche asset classes, partnering with best-in-class managers for each asset class. To highlight one, we partner with one of the top student housing developers in Canada. We participate in equity capacity in the refurbishments of a lot of student housing. Think mismanaged buildings that have been close to a university but never explicitly sold as student housing. The issuer comes in and really does conservative tenant improvements, gets the foosball table in there, paints the place, gets the gym going, puts a F1 simulator in. Really, these student housing projects absolutely put what I lived into shame. The end result for investors is historically about a 15% net IRR. So over less than a year, which as far as real estate goes is a very truncated timeline and a really spectacular result as far as returns go.
That's really interesting. And then aside from student housing, which is such a niche and unique asset class, there's been some other transactions with commercial or industrial properties in parts of the States and the Sun Belt.
Yeah, exactly. So that, again, going back to what we look for, it's sort of niche asset classes, many of which have those truncated time periods. We look for real estate mandates that are applicable for our retail clients, have liquidity in short order versus something like a development of condo in Toronto that takes 5 to 7 years before you see a return.
Yeah. And I think from a client standpoint, clients find real estate very interesting because they're so familiar with the concept of a development or a real estate transaction, and getting access to some of these strategies and deals in the United States is very appealing. And we can bring that back to what you said at the beginning of this conversation about the structure and the tax efficiency, because it would be very complicated for someone from Toronto area to go in the States and do a development project in the States, different jurisdictions. So you really have to rely on professionals from that area.
Exactly.
And then we have to rely on the expertise of your team and your network of accountants and lawyers to create a feasible structure to protect our clients from any tax issues.
Exactly. And in a sense, it's a full concierge sort of access to private markets. That's what we do provide in capital markets.
So there's a lot of high hopes for these private investments. Do you have any outlook on what's to come for the capital markets division in the next year or two?
Yeah, absolutely. I mean, as it pertains to a lot of these pre-IPO companies, I think the window is starting to open. We've already seen that with, several names, whether that's Circle or, Roblox or whatever it is. This year seems like, despite what's going on with Trump and geopolitical risks, it's likely that we're going to see a lot of the names we've invested over the last few years go public, as well as many new names that we're investing in today. The time frame in which we'll see liquidity will be actually truncated. We're looking at 12, 24 months, or sometimes less in many cases.
That's really exciting, because those are such unique opportunities that many investors don't have access to. And it's just such a complement to the portfolio as a way to diversify them away from the more traditional public investments, diversify them away from the more traditional 60-40 portfolio.
Exactly right. And that's the way we look at it. It's not that private markets are going to usurp your public market, portfolio. It's a good complement to what you already have.
Couldn't agree more. Mike, thanks for your time.
Thanks so much,
Appreciate
Eric.
it. It was a lot of fun.
Likewise.